Welcome to your Crypto Weekly Recap. From big IPO buzz to tokenized markets on the horizon and Bitcoin holding steady in a tight range, we'll break down what it all means for the week. Let's dive in. First up, Gemini, the Winklevoss twins exchange, just pulled off a massive US IPO, raising $425 million. Shares priced at $28 and demand was more than 20 times oversubscribed. A clear sign that traditional investors are still hungry for crypto exposure. Speaking of traditional markets crossing into crypto, Nasdaq has filed with regulators to allow tokenized securities on its main exchange. If approved, it could bring stocks and bonds directly onto blockchain rails. On the other hand, India is pushing back against setting up a full crypto framework. Officials argue that formal regulation could actually create systemic risks instead of reducing them. Meanwhile, in Hong Kong, HashKey is launching a $500 million Digital Asset Treasury fund targeting Bitcoin and Ethereum. It's another example of Asia doubling down on institutional crypto adoption. Adding fuel to the conversation, Tom Lee from Fundstrat says he sees Bitcoin reaching $200,000 by the end of the year, driven in part by expected Fed rate cuts. Whether or not you believe that number, it shows how much weight macro policy holds over crypto markets right now. Looking at the charts, Bitcoin has been consolidating in a tight band between $104,000 and $116,000. ETF inflows have slowed, and derivatives are starting to drive more of the price action. On-chain data also shows that over 95% of Bitcoin's circulating supply is sitting in profit. That usually means most holders are already ahead, and for momentum to continue, bulls need to push past the resistance zone around 114K to 116K. So to recap, we have big institutional moves, cautious regulators, and a market that's waiting for its next catalyst. The setup is tight, and all eyes are on policy and interest rates. That's it with our weekly recap. Thank you for watching, and we'll see you next week.